Hello everyone, this is Betty Academy. Our job is to make school easier, and if you like our videos, kindly like, share, subscribe, comment, hit the notification bell. And in this lesson we are going to learn about manufacturing account, and we are going to prepare a manufacturing account together with a statement of profit or loss. The essence of preparing a manufacturing account is because it shows the cost of running and maintaining the factory. It is prepared to calculate the cost of goods produced during the year, and it is also known as the production account. Cost of production includes direct cost and indirect cost. Yeah, those two costs, that's what comprises the production cost. So when you look at this illustration, we have this illustration. We are going to do it with the help of an illustration, and we have it here. So let's read together. We are starting from up here. The following information was extracted from the books of Kamau Manufacturers Limited as at 30th June 2021. So we have a factory building here together with their balances here. We have the debit balances and the credit balances. So we start with factory building. We have it, machinery at cost, equipment at cost, inventories as at 1st July 2020. We have raw materials, work in progress, finished goods, manufacturing wages, purchase of raw materials, indirect wages, factory power, heating and lighting. We have accumulated depreciation as at the beginning. We have for machinery, equipment, we have the sales for the year, royalties, administrative wages, rent and rates, and allowance for unrealized profits as at 1st July 2020. We also have additional information. So with the additional information, we have it here. Inventories as at 30th June 2021 were valued as follows. Those are the inventories as at the end of this particular financial period. We have raw materials, work in progress, finished goods together with their balances. Additional information number 2, heating and lighting was apportioned to the factory and the office in the ratio of 2:1. So we also have 3. Factory profit is calculated at a rate of 25% of production costs. We have 4. The following balances were provided as at 30th June 2021. We have accrued indirect wages and prepaid rent and rates. Then we go to additional information 5. Rent and rates were apportioned to the factory and the office in the ratio of 3:2 respectively. 6. Non-current assets were depreciated as follows. We have machinery at 15% straight line, equipment 10% reducing balance. Then you are required to prepare a manufacturing account and statement of profit or loss for the year ended 30th June 2021. So we'll start by working out the additional information. When you look at additional information number 1, those are just closing balances. I'll show you where we'll use them. Then we go to heating and lighting was apportioned to the factory and the office in the ratio of 2:1 respectively. So you go back to the trial balance. We have heating and lighting. Where is that? We have it, heating and lighting, and the amount is what? 128,040. So the portion that will go to the factory it's what? Sorry, it is 2:1. So you add 2 plus 1 is 3. So 2/3 of that amount is what will go to it will go to factory, and we have it here. 128,000 times 2/3 of that, you get 85,360. Then we are done with additional information 2. We go to 3. Factory profit is calculated at a rate of 25% of production costs. So that information we'll use it later on. Then we go to 4. The following balances were provided as at 30th June 2021. So we have indirect wages, accrued indirect wages amounting to that. So at any time when you see the term accrued, outstanding, it could be accrued, outstanding, in arrears, all those ones, they mean the same thing. So when you look at that, we have accrued indirect wages. Indirect wages we have, it's 274,080. So you have to adjust for that. Yeah, you have to adjust for that. You have this one, you add that, you get that. Then you go to heating and lighting. No, rent and rates here. Prepaid rent and rates amounting to that. You go back here, rent and rates 62,400. This one is prepaid, meaning it's meant for the following year. That one you subtract. When you look at our workings, we have rent and rates 62,400. Yeah, minus 2520. And when you go to the other additional information 5, rent and rates were apportioned to the factory and the office in the ratio of 3:2. So 3 plus 2, 5. So 3 over 5. So you 62,400, yeah, minus the prepaid of 2,520 times 3 over 5, you get that 5,928. You've adjusted for that. Then you go to what? You go to additional information 6. Non-current assets were depreciated as follows. Machinery 15%, straight line. You go to machinery at cost 534,000. Yeah, it is straight line. So 534,000 times 15%, you get 80,100. Then you go to equipment. Equipment 10% reducing balance. Yeah, when you look at our illustration here, we have equipment at cost 204,000, and we have our accumulated depreciation for equipment 111,000. So that's why you have what? 204 minus 110,000. Then you get what? You have your, what do you have here? It's at 10% reducing balance. So times 0.1, or rather times 10%, you get 94,000. Sorry. No. Here, once you subtract, you get what? You get 204 minus 110. You get 4. Here you get 94,000. So 94,000 here times 0.1, not there, 0.1, you get 9,400. So you are done with all the workings. Then we need to prepare now. We are looking now at our we are done with the additional information together with the workings. So the illustration, it will go like this. We have you are required to prepare Kamau manufacturing account for the year ended 30th June 2021. That's how it will read. The head, the title of our manufacturing account. You start with the opening raw materials, which is 69,240, and this is it. Inventories at the beginning 69 to 40, which is raw materials. Then you add purchases of raw materials 519,000, and this is what we have here. Then you go to closing inventory. When you look at additional information number 1, we have raw materials. These ones are as at 30th June 2021. Raw materials 55,872. That's what you'll have here. You get that, raw materials used. Then you add manufacturing wages. Manufacturing wages, you pick it as it is. This one 281,580. That's what you'll have here. Then royalties 33,600. This is what you have. Royalties, which is also a direct cost. Yeah, 847,548. And at that point, you have all the totals that you have. That's what you refer to as prime cost. Then you add overheads. These are indirect costs. Yeah, but those costs are incurred by in line with the production of the goods. So you go to the first one. Yeah, we are following. We are going one by one. So you go to indirect wages. It is 274,080. And there is a note about the wages somewhere. Wages. Yeah, we have additional information for the following balances were provided as at 30th June 2021. Accrued indirect wages. So that one is accrual. That one you have to add. You have to add to your indirect wages 274,000, because that one was incurred during that particular period, and it adds up to 281,580. Yeah, when you look at your workings, you should be able to get that. Indirect wages 274,080 plus the accrued of 75, you get this, and that's what you'll put here. Yeah, you'll have it where is it? This one. Then you go to factory power. Factory power, it is here in the illustration. Factory power 92,040. So you have 92,040. You go to heating and lighting. That one we had already worked out. So you pick it as it is. Heating and lighting, we have 85,360. Then you go to rent and rates. We had already done that for rent and rates. So we have 62,400. Yeah, that one we had already adjusted. 62,400, which is this. You minus under additional information for prepaid rent and rates 2,520,000. But don't add this one, it is already truncated. If you look at here, you have your 3 zeros, so you only take the first 4 digits. 2,520. This is what you have. So this minus the prepaid times 3/5. And the 3/5, we are getting it from additional information 5. Rent and rates were apportioned to the factory and the office in the ratio of 3:2 respectively. Yeah, so 3/5, you get what? The 3 plus 2, you get 5. Then the 3 is what? The 3 parts. 3/5 is what is going to the factory. So 3/5 of what you got here, you get that 5,928. And that's what you'll have here. That if when you look at our whatever, our solution, you have that 5,928. Then you go to depreciation. This one we had already calculated. We have this one, depreciation for this one, equipment and machinery, 80,100, and the other one 9,400. So you have the two here, depreciation and the equipment, that machinery, that. Then you'll have your cost here. At this particular point, you remember you have your work in progress. This is the point that you have to add opening work in progress. When you look at your illustration, you have your opening inventories as at 1st July 2020. We have raw materials work in progress, which is 47,340. This one, look at the date. Then you go down here, we go inventories as at 30th June 2021. Now they were valued at, we have working in progress 32,520. That's what you'll have here, this one and this. For the opening, you add. For the closing, you deduct. You get this one. This is what you get, and that's what you refer to as production cost. So at that juncture, you need to calculate the manufacturing profit. And when you look at our additional information 3, factory profit is calculated at a rate of 25% of production cost. And what is our production cost? It is 1,446,676. So you go to manufacturing profit, 25% times the production cost. You get our manufacturing profit to be 361,669. So that's what you put here, and you'll get your transfer cost. This is the transfer cost that you'll transfer to your, when you go to the other bit where you'll be trading. Yeah, once you are done with manufacturing of goods, you don't leave it at that. You have to trade. Yeah, for you to be able, those goods have to reach the customer. So at this point, you prepare among manufacturers statement of profit or loss for the year ended 30th June 2021. When you look at your illustration, we have sales. Yeah, you have, these ones are your sales, 2,550,000. You have it there. Then you have to deduct our cost of sales. Opening inventory of finished goods. Yeah, finished. Now we are looking at finished now. Yeah, so our opening is always in the trial balance, but our closing, always anything when you come up across any closing in inventory, whether it's raw materials, work in progress, finished goods, it's always under additional information. So our closing stock is 99,000. So you have your opening to be this, then you add your transfer cost. The transfer cost is what you are transferring from manufacturing account, which is 1,808,345,000. You put it there, add there, you less closing stock under additional information 1. You'll have closing stock of finished goods, 99,000. You get that, you get that. So at this point, you have your gross profit. Now, at that point, we go to heating and lighting. Heating and lighting, you go to workings. When you go to workings, what were you told about heating and lighting? We have heating and lighting, two-third under what? Under additional information. Additional information 2. Yeah, I hope you're able to see additional information 2. Heating and lighting was apportioned to the factory and the office in the ratio of 2:1. So 2 plus 1, you get 3. So 1, it is respectively. So 1 over 3 is what is going to the office. Yeah, so we have, it's under heating and lighting, 128,040 times 1 over 3. You will get what? This is what you get. You get 42,680. Then from there, let's have what? Let's calculate now this one. URP, it means unrealized profit. So unrealized profit, this is the way you calculate it, right? This one is our solution, right? I hope you are able to see that. So unrealized profit, we have what do we have? We have these. The transfer cost is 1,808,345, right? I hope you are together. We are together up to that point. And this is what you have, right? This one. This is the cost of sales. 1,803,426, right? But we have this particular, remember, this transfer cost has some element of manufacturing profit, but not all goods were sold, right? Not all goods were sold, because if you transferred at this, and this is what we have here, we need to get the unrealized profit. Unrealized profit, you have it here. You calculate this way. This one is the transfer cost, and the cost, when you look at the factory profit, it was calculated at a rate of 25% of production cost. So 25 over 125 times, this is the transfer cost minus this particular figure. This particular figure. This one minus this, you get the unrealized profit, but you get the difference, and from there you only want to get the element of unrealized profit, and of which you'll get what? Once you calculate, you get 984, and that's what you have here, unrealized profit. Then you go to wages. These are, don't confuse these wages and the ones that we had under manufacturing, because when you are manufacturing, definitely you have labor. You have employees, workers who will be working in the factory, and they need to earn what? A wage. But this one in the office, again, you also have people who are there working in the office under administration. So we have their wages here, administrative wages, which is 108,600. Put it here. Then you go to rent and rates. Rent and rates, what were we told about rent and rates? We were told in additional information 5. Rent and rates were apportioned to the factory and the office in the ratio of 3:2. In the ratio of 3:2. Those ones are rent and rates. We have it here. We had already adjusted. So here, what you will change here, it was in the ratio of 3:2. So the portion that is going to office, it is 2/5. Here you only change the 2/5, and should be able to get this figure. This is the figure that is going under rent and rates, 23,952. Once you get at that point here, yeah, you get it at this particular point, you need to deduct the manufacturing profit. Remember here, you only transferred together with this, and also the factory, when you are trying to look at the profit at any level, you need to know at manufacturing level what was the profit. You deduct the profit, which is 361,669. That's what you will this one has just been rounded off, so 361,670, and you should be able to get a net profit of 932 and 28 shillings. So that's the end of our lesson. Please watch out for our next video. Bye.